Welcome back, internet friends. I haven't made a video about gold and silver and precious metals in a long time. So today I want to talk to you about the gold and silver creation versus money creation during the COVID-19 era, as well as the gold and silver creation during different presidential terms, like Obama's term compared to Trump's term. Here we're looking at visualizing US money supply versus precious metals production in the COVID-19 era. Unlike modern currencies, precious metals cannot be created out of thin air and they derive their value from scarcity. So in the COVID-19 era, how does the value of US gold and silver production compare to US money creation? This little silver block you see right here, that's how much coins were minted in silver per person over the COVID-19 era. This little block was gold, and this big block was how many dollars were created and the debt that was added per person. And this is only going from January to September 2020. Now this is the total amount of debt per person. So imagine this humongous block of money that's $10,250 printed per human being in the United States, and there's over 330 some odd million people in the United States. So if we add up the debt and the dollars printed, we're something like $22,000 per person was created just since January. That's a lot of money just created out of thin air, and an expansion in the money supply. So this has been a tremendously huge expansion over this year compared to other years. Compared to how much silver and gold have come out of the ground, it's incredible. Would you rather be all in cash? And cash is good to have on the side. If prices in precious metals do dip, then you can use that cash to accumulate those assets. But right now, we're seeing the price of precious metals increase really high throughout 2020, and we're seeing other assets like Bitcoin and cryptocurrencies skyrocket. Let's take a look at today. This is incredible. This is just the last 6 months of Bitcoin. Huge rally in Bitcoin. We went from $10,000 in October. Now we're almost $16,000. The current price is $15,700. So this is a gigantic move in Bitcoin. People are looking for something besides dollars in this time, because so many dollars have been created. What would you rather be holding? Cash is trash. That's what Robert Kiyosaki used to say. They're not even accepting $100 bills in a lot of retail and restaurants right now. When I go to the bank, I take most of my cash out in 50s and 20s because I don't even want to hold a large amount of $100 bills. I don't like to buy on this humongous green candle like we had the last few days. The price of crypto and Bitcoin is already correcting a little bit. It's definitely going to get closer to these average prices, but $13,000 Bitcoin, $15,000 Bitcoin, $100,000 Bitcoin, it's not out of the question when you see what's been going on with how much money has been created. So let's get back to what we were talking about with our gold and silver. Our big block, $22,000 per person was created since January, and only $4 worth of gold were created since January, or $1.65 worth of silver. Now, to put it another way, this shows us by ounce coins. For every ounce of silver that was minted, $150,000 was created, and it gives us this graphic here. And as far as gold, for every new ounce of gold minted in the US, the Federal Reserve added $4 million to the money supply. So that picture, you can just see all these stacks of paper money compared to one little gold coin. That is a lot of money created per gold and silver coin. Back in the Roman Empire, they had a time of inflation as well. Originally, their currency was the denarius, and the dinar used to be almost completely comprised of silver. These are amazing coins if you ever find them. They will have the stamp of Roman emperors on them. But the ancient denarius was a 10th ounce of silver, and that was 1 day's labor for a Roman soldier or a worker. That was the average. I'd say maybe that's $100 today, right? Well, over time, the Roman Empire spent way too much money on military expansion. They became in debt because they had a horrible emperor, the one that was in the Gladiator movie. He was a real bad guy, and he actually wasted tons of the empire's money. There were some bad emperors, too much war, they had famine, mismanagement of money, they had the plague coming around 500 AD. So the Roman Empire slowly began to create more denarius, but not out of silver. They needed to create money out of thin air, so they added copper little by little into the silver coins. And over the decades, those silver coins became less and less silver. Eventually, there were no silver in them at all, and people didn't even want the flimsy copper coins anymore. So that was an example of ancient history expanding the money supply the way that we are now, but in a different way. We've done it digitally. They had to actually create physical money to inflate their currency. We have the digital world of bank accounts and EDD accounts, and you just log in and oh my gosh, look it, I got approved for a $25,000 PPP loan. Oh, and an $18,000 EIDL loan because COVID-19. We have the ability to create way more than the Romans did. And that's what we've done this year, as these graphics show. I also want to show you the debt growth and the gold creation, the precious metals creation, compared to different presidents. Right here, because it is election time, I'm sure everyone's heard way too much about the election by now. But let's compare recent US presidents' new debt added versus the precious metals production. So we're comparing debt growth to gold and silver coin production during different US presidencies. While precious metals can't be produced out of thin air, the US debt can be financed through central bank money creation. In fact, debt has skyrocketed in the recent years. How has the value of gold and silver coin production compared to the rise in public debt during past presidencies? Let's look at our good old buddy Obama there. This is the total production by presidential term. Obama. Look at the cartoon they used for your face. I mean, that just doesn't do him justice at all. So Obama's first term, there were $3.7 billion worth of US silver coins created and $6.7 billion worth of gold coins created. But look at the debt. We added $5.2 trillion in debt the first term, and the second term $2.9 trillion. In total, it looks like Obama added over $8 trillion worth of debt. How much silver was minted? It looks like $7 billion. 7 billion compared to 8 trillion. So there's a crazy large amount of money being created and debt created during Obama's presidency, more so than any other president before him. But as we're going to look at Donald Trump in his first term created $6.6 trillion of debt. So Obama's numbers, he's looking at $8.1 trillion in debt, about almost $12 billion in gold minted, and about $7 billion in silver. So trillions, we're talking $8 trillion versus $7 billion in silver. That is a lot of debt creation. Now we look at Donald Trump, right? This was from 2017 to current. 1.4 billion ounces of silver. According to this, gold and silver coin production dropped each year consecutively during his term. So very little silver was created so far in the first term of Trump. Yep, that's a lot less than half of what was created in the first 4 years of Obama. So we can see a shrinkage in the silver production during Trump's term. It looks like 2.9 billion worth of US gold coins were minted. So that is a lot less ounces of gold and silver coming out during Trump's first 4 years than Obama's. Obviously, that's because mines were shut down. COVID-19, all over the world, mines were shut down. We had South African power problems, so a lot less production. This is talking about the United States, of course, but we can see less than half, I think almost like 35-40% of the production during Trump's first term versus Obama's first, and 6.6 trillion in debt. In Trump's term so far, the value of the new US debt is almost 1,600 times higher than the value of US minted gold and silver coins. So a tremendous amount of debt created under Trump, obviously stemming the chaos and the financial burdens of the pandemic, but every president has expanded the money supply and increased the national debt more than the president before them, I believe. If I'm wrong, you guys can tell me who the good president was in the comments. And if you find this information helpful or you're enjoying this kind of content, please smash the like button, go ahead and subscribe. So let's wrap this up. Here is how much public debt was issued per ounce of minted gold coin. So we see Obama's first term, 1 million in Obama's first term for every ounce of gold, 700K for every ounce of gold in his second term. Look at Trump's first term, 3.5 million in public debt issued for each 1 ounce gold coin. This is a good reason to have some 1 ounce gold coins, people. Debt saw a marked increase in Obama's term and Trump's first term in response to the global financial crisis and, in Trump's case, the COVID-19 pandemic. Looking forward, the US public debt is expected to continue its upward trajectory. By 2030, public debt is expected to reach 109% of US GDP. It looks like 2030 they're projecting 33.5 trillion in public debt compared to, looks like right now we're at 21 trillion. So how could the debt growth differ under Trump or Biden? So this deficit impact of campaign plans from 21 to 2030, it looks like excluding policies related to COVID. So this doesn't even talk about future pandemic stimulus or anything like that. Trump, on his low estimate, is saying he's probably gonna raise the debt $0.7 trillion. That's the low ball. Biden's saying he's gonna reduce the debt by $0.25 trillion. I think those are terrible estimates with what kind of things we have ahead of us. It's more likely going to be the high estimate or the central estimate. So Trump is estimating that he's going to have to raise the debt between $5 and $7 trillion, or Biden is saying he's going to increase the debt by $5.5 to $8.3 trillion. So under Biden, we would have an accelerated amount of debt production, accelerated inflation. Either way, debt is bad. It comes with interest, and our country's got to pay that interest back through some sort of means. Usually it's taxation on the people, austerity, or it's straight up inflation. So while gold and silver coin production have declined in recent presidential terms, US debt continues to climb to historically high levels. And at that, I'm just going to say thank you so much for watching. If you enjoyed this video, you found it informative or helpful, please help me out by smashing the like button. Go ahead and subscribe. Please leave me a comment. Tell me what you think. Thank you so much for watching. I'll see you next time, and just have a great day.